How's it going, guys? My name is Franka and welcome back to the channel. Today we are doing our monthly analysis, this time for August. It literally just ticked over about 4 minutes ago into the September bar, so we're pretty well smack bang right on time to do our monthly analysis. So in this video we're basically going to be going over our last month analysis video, not watching it or anything, but I've got some notes ready from last month. We're going to see how those things played out, if it changes our thesis at all of what is to come, and basically our projections into the future. So let's start off with Bitcoin. So basically last video we had a look at our 4-year cycle. Now of course, as you can see here, we've got the black lines indicate the halvings, and then we've got these periods in between the halvings. So we got the, where would we start? Let's start on the red period. We got about, a year down, 2 years across, and 1 year up, hence the 4-year cycle. So if we zoom in here, as you can see, we are still intact for the 4-year cycle. Last video we were saying how we were, a little bit ahead of schedule and that we could expect a pullback. Now, to be honest, I thought we would go a little bit higher. I thought, because if you have a look at all the previous cycles, we kind of run up and hit the halfway point at least before we see any real stagnation in price. You can see that we run up, hit the halfway point, slowed down. Same with this one, we run up, we actually overshot the halfway point, but then we slowed down. Whereas this time we've kind of run up, not quite hit the halfway point, and it looks like we're starting to slow down already. So we were expecting some kind of slowdown, some kind of pullback, but I will admit I thought it would come a little bit later in the cycle, or a little bit later in time. I thought we would at least get to that halfway point. I thought we had a little bit of movement ahead, but if not, so be it. We can't always be right. That's all good. And what we can see here, so I've kind of drawn these orange boxes, is that if you have a look at the previous cycles, pre-halving year is generally a little bit gross. It is a boring year. Nothing really happens. You can see, from November of the 2 cycles ago to, it's hard. There's so many boxes to April. So November to April, price literally didn't move at all. It was basically sideways. It moves up and down, but nothing significant. Same thing here. In the previous cycle, we had June to, really, if you're looking for the breakout candle, till October, the next year, over 12 months. So there is a lot of the big possibility here that we are already in the stagnation point, the pre-halving year where nothing happens, and that we could expect pretty well all sideways movement until, roughly April of next year, which is a long time away and probably not the fun news everyone wants to hear. Everyone wants to hear price is either going to crash or price is either going to, boom to new all-time highs. But at this stage, we're pretty well, if you're following the 4-year cycle and, the real estate 18.6 year cycle, we're pretty well just saying that nothing's going to happen probably for a little bit, and that it's going to be a pretty boring period in the markets. Maybe we do shoot up a bit higher. Maybe we come up and test, previous lows of, 34,000, 30,000 again, whatever it may be. But I think ultimately it's going to be not too much either way until at least closer to the halving, until at least, 2024, we'll see a significant move. And you hear people saying, we're going to break to new all-time lows in 2023, all these projections about 2023. I think either which way you put it, the end result is going to be pretty similar. It doesn't matter whether we shoot up higher. It doesn't matter whether we break down just a little bit lower. Ultimately, not a lot will happen, I think, for the rest of 2023, until at least we get closer to the halving. So basically, for our monthly analysis, what we're looking at in the previous video, which this is it on screen here, you can kind of see how we were drawing this kind of sideways channel that we would probably be in for a little bit before we hit our stack of money, which is the end of the road. Not the end of the road, but the new all-time highs is where the stack of money is at. So nothing's really changed so far. I did kind of think we could have had a little bit longer, maybe a little more push up, but you can see that, we're basically, this channel that we were talking about last month, we're likely in it now, and it'll likely, we'll be in that for a little bit longer. So now we'll jump into the weekly chart to try and break down this just a little bit further. In the last video, we were looking at basically for the weekly chart whether or not we would be able to hold this 28k range. We're talking about it being some significant support for the market. Now, obviously, it hasn't held that spot, and we're kind of looking at different ways in which we could hit our target by the end of this cycle. So if we go back to the video, you can kind of see here how we've got a whole bunch of different lines. Maybe we just trend sideways along here, and then we hit our target. Maybe we break down lower and get a late push. We're kind of looking at all these different ways in which we can get to the end target if we are still following the 4-year cycle. So if we were following the 4-year cycle, we're kind of looking at different ways in which we can hit our stack of money, which is, I think that's a little bit, no, that's right, December. Yeah, it's in December of 2024, that's right. So we're kind of looking at how we can reach, 69,000 by December 2024, if that's, kind of following the 4-year cycle. And now what I've got on screens here is some critical swing lows. So these are our monthly swing lows that we're looking at. Now, if we had it, I don't have it on me right now, but like if we had a monthly swing low chart, all these lines indicate the swing lows for the month. And these are basically critical support zones. And the lower we go, the weaker Bitcoin becomes. Now, I do think that I think for the most part, we should be able to hold at least most of these. If we were to break down of our, June swing low, which is this first black line here, I don't think that's the end of the world. I think that, it's kind of just a part of the churn that we're talking about where we get this, pre-halving churn. It won't matter too much. But if, this March low and this November low are the critical ones. I think if the March one breaks down, if the March one breaks down, it could become quite unlikely that we reach our December 2024 target. And if we break down of our November low, which is the current cycle low, if we break down of that, then I think this target is well out of the picture. Because if we're talking about how long it takes Bitcoin to recover, so if we're just going to churn along here, it probably won't take too long for Bitcoin to recover. We've kind of looked at previously how long, the nothing periods last, and they can last, a few months of, where price basically goes sideways. And then we can start looking at getting higher and eventually running up, right? That's not out of the picture. That's quite a realistic view, I think, in my opinion. However, if we come down to here, okay, that's not good. Price has to, really have some time to consolidate before we can, start to break up. And we'll have a look at this in the daily chart, what I'm kind of talking about here. But if we were to break down even lower, if we were down in this range here, that's going to take a very, very long time to recover. And if we break down to new all-time lows, new cycle lows, then things are not looking good. Just look at how long it's taken Bitcoin to, basically move 100%. It's taken, 40 weeks, almost a year now since the low. So, if we were to break down into these lows, assuming it happened, say a few weeks from now in October, and we're looking at 40 bars just to get, somewhere into around this range here, break back up into here, it would have to be a, huge recovery, which I just don't see happening in order to hit our target. So if we're looking at hitting our 4-year cycle target, if we're a believer in the 4-year cycle, like we have been so far on our analysis, we could break down into this range here. I think that is entirely possible. I think that's okay. If we break down into here, I'm getting worried. I'm probably going to start reconsidering what I'm doing. And if we break down even lower, if we break these cycle lows, things are not looking good at all. I don't think we can hit our December 2024 target. But in saying that, I don't think we're going to break these lows. I think they're very significant lows. And I think that we'll basically churn around this 28, maybe even up to 30, mid 30s down to this lower range here. We could really churn around there for a long time, as we said, until about April 2024. And if we just put a vertical line on April, just for context, so let's say April 15th, a big vertical line there. So that's the halving right there, right? So the Bitcoin halving is, it looks pretty close here. It does look pretty close, but that's not to say that we can't, do some crazy things in that time. How many bars out is it now? It's about, 33 bars. So it is getting pretty close. I don't think that we have time, if we're to reach this target, to break down lower. If we do break these lows, then the 4-year cycle is effectively out the window, in my opinion. But I do think it's just going to be a bit of churn until then. How long we spend down in these levels. If we stay around here, then I think we could break up nice and soon. Really into that, looking, at that December 2024 target. If we break down lower, we're going to spend a lot longer down here. We might do something like this and then start to run up. Something, if that's making sense. The further we break down, the longer it's going to take to recover, is kind of what I'm getting at here. So yeah, if that makes sense. Hopefully, if you've got any questions, ask them down below. I really hope that whole sentence made sense. But yeah, so that's basically our weekly analysis. Now we'll jump into the daily charts. Okay, so here we are now on a daily chart. Now we still have our April halving, and we still have these critical low levels, or the monthly swing lows that we were looking at before, as to where we can kind of break into. And now what we're looking at here, what we were looking at last month, was basically how long these periods of basically nothingness can happen. And we're waiting for a definitive move, is what we said. We're waiting, okay, so price, I've missed one of our date ranges. I'll find it here in a second, hopefully. Oh, there it is. There we go, that one. So the big 12 bar one. And what we're looking at here is basically that price often will do a whole lot of nothing. As you can see, these red periods are our nothing periods, and then price will have a big definitive move, a short-term definitive move. As you can see here, these green zones are all of our definitive moves. And it's kind of what's happened here again. We're kind of just sitting at the top here waiting. Okay, where is our definitive move going to be? And we're looking at the fact that these can kind of last, 60 to or 48 bars to 80 bars, so 2 to 3 months. And this one was about 54 bars or 54 days, and we got our definitive move to the downside. Now we were wrong on this. We thought it would go up, because we thought that if we go back to this chart, we thought we'd hit the halfway point. We thought that could be a possibility. Now obviously it didn't happen, but we had a really, really short definitive move. It's hard to even call it one. We could be jumping the gun here. It might not actually turn out to be a definitive move, because if you have a look, you get a lot of these big moves in the kind of, well, they're not really big in retrospect, but you kind of do get these fake outs all over the shop before you see that big move. And that could just be just one fake out, maybe. We might look back at this and say, that this, definitive move period was actually, a big 80 bar period, and that, we shot up or something, or we really broke down. It's hard to really say. But at this stage, we're kind of looking at this being a very short definitive move, about 1 bar down, really one big significant bar down that we broke. And now we're kind of just churning along here. Now how long we're going to see another churn period for is anyone's guess, but based on history, what we're kind of looking at here is that the bigger the move, the longer the churn period after. So as you can see here, we had a pretty substantial move, or actually compared to the other ones, it's not very substantial, but we had a move from about 16k to 22k. So, $8,000, but a decent move. And we had about 48 bars across. Now, this big move here, this one that took about 12 bars, this one was, almost $10,000 move for Bitcoin. And you can see here that it had a big, long churn period after, because it was a big $10,000 move. And then, of course, this move here was quite a small one. And we saw a relatively, at least compared to the previous one, a small churn period. So what we're trying to say here is that, a small definitive move, we'll see a small churn period compared to a big move. We'll see a bigger churn period, basically, if that makes sense. So what we're looking at here is, because this one was 1 bar down, effectively, maybe 2. I mean, it was more like 2, really. But, either which way you put it, it was a very small period of churning, collapse. And kind of what we're looking at now is that, okay, well, this was really short-lived. We expect this churn period to last probably the smallest out of all of these, based on history. So we're kind of looking at, okay, 48 bars. Maybe this one's only like 40 bars. Maybe it's a month. Maybe it's 30 days. Or as we said, it could just be, we could look back at this and say this was all just part of a bigger churn. Maybe we have a big long period here and then we shoot up. Or maybe not 160 bars, but maybe like a big 90 bar one or something and before we shoot up. It could be something like that, but basically at this stage, we're just looking at it being, we're expecting a short-term churn before we see any definitive move. Now, where that definitive move takes us is really important. As we said before, where depending on how low we break down, the longer we're going to spend down at these lows. So if we break down here, maybe a couple months down here, whatever. If we break down even lower, if we come down towards this range, it's going to be months. It's going to be a long time before we, recover and see any, real recovery in price, and before we start seeing new cycle highs. I think this would be terrible if we were to get down to here. And if we break into these fresh cycle lows, then I think at that point it's about the throw everything we've spoken about out the window. Forget anything I told you about the 4-year cycle and, shooting up for, this our target price. If we're following the 4-year cycle, throw that all out the window, because if we're down here, it's going to take a long time to recover. So that's kind of what we're talking about, and how long we have to wait till we see that definitive move, till we can start to determine how long we're going to be down at these ranges. I say about a month, maybe. It's a rough guess. I can't tell you guys where the price is going to go, but maybe a month, and then we'll see some sort of definitive move in the market that can kind of tell us where price is going in the short term, so then we can start, projecting more into the long term. Alright, so we'll quickly wrap this video up with some Ethereum and Kronos technical analysis. I don't know, whatever you want to call it, chart looking, adding, whatever you want to say. Now, basically, last video for ETH, in my notes, I put break above good, break down trend line okay, and break below trend line not good. So pretty simple, pretty not really the most crazy analysis you've ever seen. But what we're looking at when we're looking at this chart, we're right around this point here. We're looking at testing, breaking above potentially. And what we're saying was that if we can break above and really actually consolidate above, none of these fake out, no wicks, no, up and downs, nothing like that. If we can get above here and stay above for just a little bit of time, then we could really be looking at shooting towards our 50% level. This is our all-time 50%, the all-time high to, I'm not going to be able to find it, am I? To $0. Somewhere down there, $0 is. But as you can see here, we didn't break above. So our thing was break above, good. Okay, so we didn't break above, which is not good. So what we've basically done now is broken down roughly towards the trend line. So we kind of come back down, and what we're talking about now is that if we can hold this trend line, it's not really the end of the world. It could just be a, ascending wedge or whatever, and we could, eventually break out above, which would be awesome. There's still plenty of time to break above. It's not to say it just because we didn't break out now, we're never going to break out. And as they do say, is that basically the more you test a support or a resistance, the more likely it is to break, etc., etc. And especially because we are still creating higher and higher lows, higher and higher lows. The next one might be here, and then the next one will break out, It could be something like that. We don't really know, but it's not just because we didn't break above that time. It's not alarm bells aren't ringing for me yet. It's just, okay, we're coming back down to retest, and if we can form a higher low and hold these trend lines, then that's awesome. The other thing we want to hold on this push back down is our 50% level. So our 50% level from here, our November last year swing low up to our peak up here, and 50% from there is roughly $1,600. So if we can hold this 50% level and this trend line, then we are looking pretty strong in the short to medium term. We're talking about pushing back up towards our resistance and hopefully breaking it if we're wanting prices to go up, obviously. Or if you're a bear, you want this 50% trend line to break, which is entirely possible. We don't really know, but obviously it's going to be largely dependent on Bitcoin. So, who really knows what's going to happen with ETH sometimes. But so far, it's looking pretty good for ETH. So long as we can stay above this in the interim and hopefully, kind of form a bit of a bottom, which it looks like is kind of happening. And then we can look at pushing back up higher. Because the other scenario was that, oh, there we go. If we break this trend line, if we break, if we get rejected, come back down, look to test this trend line and break it, well then, we're not going to $900, but that was just a squiggly line I drew, was that, we're probably going to spend a lot longer down here. So it's kind of similar to Bitcoin, where I think right now it does look pretty good. It does look like we can, maybe hold this level and push up a little bit higher, which is really good. But if it breaks down, the further it breaks down, every low that gets taken out means we're going to spend a lot longer down in these prices. So what we're looking at for ETH for the month of, what month are we in now? September. Wow, time flies, right? So if we can just hold this 50% level, start to push up again, that would be awesome for ETH if you're a bull. So fingers crossed that happens. Let's go on to Crow now. Alright, so for Crow, we're kind of looking at a bottoming pattern forming here for Crow, a Wyckoff accumulation forming. So I'll pull up one of those for you guys now. Alright, so you can see here that a Wyckoff accumulation has a lot of different phases and, different points that we're looking for. And we're kind of trying to locate whether this is, a matter of fact, a Wyckoff accumulation phase or not. I do think if we're just looking at it in terms of the cycle, the Bitcoin 4-year cycle, so if we're expecting Bitcoin to be at all-time highs by December next year, and then we're expecting, Bitcoin to have a big parabolic stage, and we're also then putting that into, so when are altcoins and different cryptocurrencies other than Bitcoin, when are they likely to pump? And we know that the altcoin season often comes after, Bitcoin goes really parabolic, and everything else at the altcoin season will then occur. So what we're looking at here is based on our timing in the cycle, the 4-year cycle for Bitcoin, is that a lot of these altcoins really have, if they're going to have a big run up in the next cycle, that they're going to have to start to bottom really soon, basically. If Kronos and, all the other cryptocurrencies, if they're going to have, huge runs in the future bull cycle, if we're looking at 2024, 2025 being a massive altcoin season, then, 2023 and 2024, these coins can't just keep decreasing. They have to start to form nice, strong bottoms so that then in the next bull market, in the altcoin season, they can have their big run up, is what we're kind of saying, right? If we're looking at this in terms of, same thing again, a bit of a 4-year cycle sort of thing. And so far, we're kind of seeing this so good. So first things first, it's nice to see is that Kronos, we're on a logarithmic chart here, but if we put it back like this, you can kind of see that, actually I think the logarithmic chart kind of works a bit better, but you can kind of see here that, the moves are getting less and less significant. The volatility is decreasing, and that's what we want to see when we're forming a bottom. We don't want prices to be going crazy or anything. We just want things to slow down. We just want price to, stop decreasing as fast as it is. And what you can see here is that these lows are slowly getting, less and less low. Basically, they're slowing down. Things are getting slower and slower. And what we're looking at here is basically that this point here was our selling climax in November 2022, and then we have, our automatic rally and then secondary test, etc., etc. And you can see here that that basically after this, so you can see what we're looking at here. So selling climax, automatic rally, and then from that point on, we can have multiple secondary tests, and then eventually we could have a spring. You don't have to have a spring in a Wyckoff accumulation phase, they say. So you don't have to have the spring, but you can just have multiple secondary tests of lower ranges. And basically what this is smart money buying up the supply, testing the lows is what they say. So, we come down, selling climax. A lot of people accumulated. The price obviously doesn't like this range, and then it shoots up. And then as we come down, people are basically done with this token. And this is where the big whales start buying up in these low ranges. They're just buying up heaps and heaps of Crow, and getting ready for the future rallies basically. And if we break this down a little bit further, if it loads, we might have to take a quick break here. I'll be back in a second. So if we break, now we're on the, so we finally loaded. So now we're on the daily chart, and you can just kind of see how these lows are getting slower or less low, I guess you could say. Less low, or they're getting higher basically, but lower. Less low than the previous one, if that makes sense. And it's kind of slowing down. We're getting these secondary tests, and kind of what we want to see from this point onwards is eventually, hopefully eventually we can have our spring or our final secondary test. And what we want is a consolidation above these prices. Now it could be a long time away, as we said. What kind of range we're looking at here is if we can pump up from some point considerably, and then get a nice consolidation above one of these ranges. So I mean, ideally you want to get above like the automatic rally point is kind of the idea. So you kind of want to be up above this 10-cent range. And the 10-cent range, now 10 cents is not a magic number or anything, but it is, for whatever reason, markets, things like Bitcoin to $100,000, Bitcoin $50,000, Bitcoin $10,000, ETH $1,000, all these different things. They kind of play on the mind games, and then for whatever reason they get used as a bit of a tricky spot for a lot of people. So if we could get above the 10-cent range and then consolidate, obviously that's a long time away at this point in time, but that's kind of what we're looking at. If this is going to be our kind of like bottoming area, that the 10-cent range consolidation above will be key here, that we can get our last point of supply basically, and then shoot up higher. Once we can consolidate above here, or even I think the 8.3 cent range could be a good consolidation point. If we can get around these areas and then kind of just hold and really solidify ourselves above that point, I think we could be off to the races in no time. And you can kind of see how we've come up, we've tested these ranges, come up, tested these ranges, not quite ready yet. And the other thing is, of course, we need to start forming higher lows and higher highs. So we kind of want to look at like these areas here as points of, these three levels. I mean, that's the high at 9.5 cents, but you really just look at 10 cents here because it's kind of the mental number. This point here, 8.3 cents, and that about 6 cents, 6.2 cent level. So that's kind of where we're looking at. If we can get above these levels, start to find some support. Ultimately, the 8.3 cents is the big one, but the really big one is the 10-cent range. So hopefully these lows can go from, really slowing down to getting higher would be ideal. And then we can look at breaking some higher highs. Now, obviously a long time away. As we said, we're looking at this point here potentially being a good bottoming area. Way back here, I don't know where I made the tweet. Which one was it? Was it this one? Maybe it was this one. No, it was... Oh, no, maybe it was... No, it would have been this low. Sorry, we're kind of looking at this low being an optimistic outlook, for Crow. If this area was starting to look good, that this could be a nice secondary test range. And we're kind of still... I know we've broken a little bit lower, but it's still not looking terrible, I don't think. It's obviously not good, but I think that, the idea of a bottoming pattern here is still intact. So hopefully that can play out, and we can, start to accumulate some Crow once we get some confirmation on where price is going. Anyways, guys, if you did enjoy, remember to like and subscribe. Hopefully this video made sense. If you have any questions, feel free to ask down below. I do have some referral codes for Australian exchanges such as Coinspot and Swyftx, as well as Koinly, which is the Australian tax crypto tax calculator, but it's a crypto tax calculator that you can use in Australia. It'll help you basically figure out your profits and losses and whatever else, and it'll simplify the process for you. So feel free to use any of my referral codes down below. It helps the channel out a lot. And anyways, I'll see you guys in the next one. See ya.